Welcome to Honor's video on adjusting your 2014 report for federal leases. Please watch our overview on adjusting your 2014 for federal and Indian leases for more information.
This video will cover adjustments on federal leases that have no effect on payments and adjustments that require additional monies. For Indian leases, please see our video series on adjustments for Indian leases on the Honor channel.
Let's start with reporting an adjustment that will have no effect on your payment. In this scenario, you most likely reported the lease and/or agreement number, product code, sales type code, sales month and year incorrectly, but correctly reported your sales volumes and royalty values.
Here's an example. Let's say your original line used a sales date of January 2015, but it should have been December 2014. In the reversal line, you will enter the original sales date of January 2015 and enter negative numbers for the reported volumes and values.
In the rebook line, you will enter the correct sales date of December 2014 and enter the correct positive volumes and values. After you enter both lines, notice the payment amount does not change. The total of the two lines equals $0 and they cancel each other out.
Remember, this type of adjustment only applies when your volumes and values were correct, but the associated information was misreported.
Okay, that's pretty easy. I'll review that part again later. What's the next scenario?
The second adjustment scenario occurs when you need to pay additional monies. This is a little more complicated, so let's start with situations that require additional monies.
Adjustments that result in additional money being owed may include increasing the price, increasing the royalty rate, or removing allowances. In other words, the volumes or values in your original report were too low.
Let's look at an example. In this example, a company determines that the original price of $10 per barrel was too low. Raising the price to $12 per barrel will increase the sales value to $1,200. The adjustment will increase the royalty value after allowances to $150. The adjustment would look like this.
The reversal line should contain the same data as the original line, except with negative volumes and values. This essentially zeroes out the original line.
The rebook line submits the corrected data. In this case, the sales value is increased by $200 based on the new unit price. The royalty value increases because of the new sales value. Since the royalty rate in this example is 12.5%, the total royalties due equals $25.
As soon as you send the corrected 2014 report, remember to send the additional money that is now due the way you normally would.
This concludes Honor's video on adjusting 2014s for federal leases. Please see our follow-on video on recoupments and refunds for federal leases. Please see our other videos on the Honor channel. We also encourage you to subscribe to the Honor channel for updates and email us if you have any questions or comments. Thank you for your time, and we look forward to seeing you in future modules.